If you think $100 is too little to start investing, that belief alone will cost you years of progress. Most beginners think investing only works if you already have a lot of money. I thought the same thing when I started. And that mindset, it keeps people stuck forever. I've seen it happen over and over again in 9 years of working in personal finance. In this video, I'm going to show you exactly what to do with your first $100, why it works, and what your next step should be, without the stress, without the jargon, and without the confusion. But before we get into it, if you're new here, my name is Jonathan Allen, and for the past 9 years, I've been helping everyday people understand how to grow their money in simple, practical ways. If that's something you want more of, hit that like button and subscribe right now so you don't miss any of these videos. Every tip I share comes from real experience, not theory. All right, let's get into it. Here's the first thing I need you to understand, and this might surprise you. Your first $100 is not about getting rich. It's not about finding the next big opportunity. It's not even really about the money itself. Your first $100 is about building the habit of investing. That's it. That's the whole goal. Because here's the truth. The investor who starts with $100 and keeps going will almost always end up in a better position than the person who waits until they have $10,000 and then starts. Why? Because starting teaches you something no book, no podcast, and no YouTube video can teach you. It teaches you how it actually feels to be an investor. You start to pay attention differently. You start to think longer term. You start to make better financial decisions across the board just because you made that one small commitment. And here's the dangerous thing about waiting. If you tell yourself, I'll start when I feel ready, or I'll start when I have more money, that day may never come. Because the truth is, the feeling of being ready doesn't come before you start. It comes after. So your first $100 isn't a small amount, it's the starting line. And standing at the starting line matters more than almost anything else. Now, I want to talk about something that a lot of people overlook, and it's costing them money right now, even as they think they're being responsible. A lot of people keep their money in a regular savings account and feel good about it. And I understand why. It feels safe, it feels responsible. But here's what most banks won't tell you clearly. If your savings account interest rate is lower than inflation, and for most traditional bank accounts it is, you are actually losing purchasing power every single day your money sits there. Let me put that in simple terms. If inflation is running at 3 or 4% a year and your bank is giving you 0.5% interest, you're not growing your money. You're slowly losing the value of it. That $100 sitting in a traditional savings account today will buy you less 1 year from now than it does today. This isn't me trying to scare you. This is just how inflation works. And the only real protection against it is to put your money somewhere it has the opportunity to grow at a rate that keeps up with or beats inflation. That's what investing is. Not gambling, not getting rich overnight, just making sure your money works harder than inflation works against it. Okay, so now you understand why your money needs to be invested rather than just saved. But before I tell you what to do, I want to tell you what not to do, because this is where most beginners go wrong. Don't try to pick hot stocks. I know it's tempting. You see a company in the news, everyone's talking about it, and you think, I should get in on that. Resist that urge with your first $100. Stock picking requires research, experience, and the emotional discipline to handle big swings. You don't need to go there yet. Don't try to trade. Trading, meaning buying and selling stocks frequently to try to profit from short-term price movements, is something that even professional fund managers with entire research teams struggle to do profitably over time. As a beginner with $100, trading is not the path. And don't overthink this. Analysis paralysis is real. People spend months researching every option, comparing every platform, reading every article, and they never actually invest a single dollar. Done is better than perfect here. And here's something important I want you to hear. Beginners don't usually lose money simply because they invested. They lose money because they panic. They watch the market dip, they get scared, they sell, and then they lock in a loss that would have recovered on its own if they just left it alone. So the mindset going in is this: I'm not here to get rich fast. I'm here to learn the habit and let time do the work. So what should you actually do? Let's keep this simple, because simple works. The most beginner-friendly, time-tested option available to you is a broad market index fund, or ETF, exchange-traded fund. Here's what that means in plain language. Instead of buying shares in one company and hoping that company does well, you're buying a small piece of hundreds or even thousands of companies all at once. You're not betting on one horse, you're betting on the whole race. When one company struggles, the others carry the weight. When the broader economy grows over time, which historically it has, your investment grows with it. You're not guessing which company will win. You're simply participating in the market as a whole, and that's a very different, much calmer, much more reliable approach for a beginner. In that guide, I cover 24 alternatives to keeping your money in a traditional savings account. Options that give your money a real opportunity to grow, and most of them you can start with as little as $100. The link is in the description below. If you're serious about taking your first step, that's the place to start. It's straightforward, beginner-focused, and built to give you clarity, not overwhelm. Here's what I want you to take away from this video. $100 is not too little. Waiting until you feel ready is not a strategy, and leaving your money in a traditional savings account while inflation quietly shrinks its value is not playing it safe. It's just a slower way to fall behind. The path forward is simple. Start with what you have, invest it consistently, leave it alone, and let time do what it does. If you're a beginner who wants investing explained simply, calmly, and without the hype, subscribe to this channel. That's exactly what I'm here to do. 9 years of experience, broken down in a way that actually makes sense for real people starting from scratch. And one more thing, I'd genuinely love to know where you're at right now. Drop a comment below and tell me, are you brand new to investing or have you started already? What's the biggest thing that's been holding you back? I read every comment and I respond to as many as I can. Let's figure this out together. Thanks for watching. I'm Jonathan Allen, and I'll see you in the next one.